is the hidden chip maker behind Meta, Google, and OpenAI, and an AI infrastructure dark horse about to cross $10 billion in annual revenue. Broadcom is rewriting the rules of the semiconductor industry while the market keeps arguing about its for 0x divided by E. A 0.8 PEG ratio is signaling something very different that may actually be undervalued, backed by a 10 GW scale AI accelerator pipeline and recurring profits from VMware. Is Broadcom the strongest challenger to NVIDIA, or the ultimate winner of the global de-Nvidia movement? Hey everyone, welcome to Stock Market Breakdown. Everyone's focused on NVIDIA, but if you follow big tech spending, Broadcom is the real force behind the scenes. It doesn't sell generic pews, it designs custom chips for giants. From Google's TPU to OpenAI projects, Broadcom is deeply embedded in AI's core infrastructure. Broadcom is no longer just a traditional semiconductor company. It has evolved into a key enabler of AI infrastructure by providing custom AI chips and high-speed networking solutions to top-tier tech giants like Meta, Apple, and Amazon. Broadcom has secured a critical position in the global compute supply chain. This means it's no longer tied to the cycles of a single product and now directly benefits from the overall expansion of big tech capital spending. You have to understand the value of customization. Big tech right now wants one thing above all: its dependence on NVIDIA. Lower costs, more control, and Broadcom is the one making that happen. You want your own AI chip, Broadcom designs it. You want faster networking, Broadcom delivers it. The selling shovels in a gold rush model gives Broadcom one of the most stable positions in the entire AI wave. Broadcom's dominance in custom silicon is rapidly materializing. Beyond its deep partnership with Google on next-generation Plus, it has signed long-term agreements with Anthropic and is working with OpenAI on a massive 10 GW scale custom AI accelerator. These deep integrations with top AI players provide strong visibility into future demand, making Broadcom one of the most competitive companies in this high-growth segment, especially its partnership with OpenAI 10 GW scale that's almost unimaginable. This means Broadcom isn't just building chips, it's helping define future compute standards. When your tech is embedded in the world's most powerful AI systems, you've built a moat that's incredibly hard to break. In fiscal Q1 2026, Broadcom's AI revenue reached $8.04 billion, more than doubling year-over-year, and driving total revenue up 29% to $19.03 billion. Even more impressive is its forward guidance. Management expects AI revenue to surge further to $10.07 billion next quarter. This accelerating growth suggests that demand for AI infrastructure is still in full expansion mode, far from any so-called ceiling. Quarterly AI revenue breaking $10 billion, that's massive. And what matters is the trend is not slowing down, it's speeding up. That tells you customers who were once hesitant are now rushing in. Broadcom's financials right now are extremely attractive. Stable legacy business combined with explosive AI growth. The dual engine is one of the most reliable setups in the semiconductor space today. Following its acquisition of VMware, Broadcom's enterprise software segment is generating consistent recurring revenue. This chip plus software model is rare in the semiconductor industry. Hardware drives high growth, while high margin, sticky software provides stable cash flow. This structure gives Broadcom strong resilience during market volatility. Broadcom's CEO, Hock Tan, is a master of capital strategy. With VMware in the mix, Broadcom no longer relies solely on chip cycles, it's like selling the hottest engines while owning the fuel network. This cash flow model supports heavy AI investment while keeping finances strong, something rare in Silicon Valley. Despite rapid expansion, investors should watch for potential risks. Custom AI chips typically carry lower margins than Broadcom's traditional high-margin software business. As AI revenue becomes a larger portion of total sales, overall margins may face pressure. This means strong revenue growth may not immediately translate into proportional profit expansion. This is the cost of growth. Custom chips bring volume, but margins are thinner compared to legacy software, which is almost pure profit. So going forward, don't just watch revenue, watch margins. If Broadcom can scale efficiently and bring costs down, the story stays strong. If not, margin compression could become a concern. Broadcom's valuation presents an interesting contradiction. A for 0x forward divided by E may seem expensive historically, reflecting strong market optimism, but its PEG ratio sits around 0.8. On Wall Street, a PEG below 1 is often considered undervalued. This suggests that relative to its growth rate, Broadcom's current price may not fully reflect its long-term potential. If you only look at divided by E, it feels expensive, but once you factor in growth and look at PEG, Broadcom actually looks cheaper than many peers. A 0.8 PEG suggests the market hasn't fully priced in its earnings acceleration. These kinds of valuation gaps are where long-term capital usually steps in. One key risk is customer concentration. A large portion of Broadcom's AI revenue depends on a few hyperscale cloud providers. If major clients like Meta or Google reduce spending or move fully in-house, Broadcom's revenue could face significant volatility. This dependency remains a critical concern. That's why Broadcom is aggressively expanding its customer base. Its engagement with OpenAI as part of building a third pillar beyond Google and Meta. Right now, these clients depend heavily on Broadcom, but the relationship cuts both ways. If Broadcom falls behind in innovation, losing even one major customer could have a serious impact on its stock. Looking ahead, Broadcom estimates its AI semiconductor serviceable market could reach $60 to $90 billion by fiscal 2027, considering the company's total revenue was under $64 billion in 2025. This points to significant upside potential. This expansive vision reinforces Broadcom's position as a leader in AI infrastructure. In the end, Broadcom is at a historic turning point. It's both the enabler of custom chips for tech giants and a collector of software profits. With a 90 BS TAM ahead, can it hold its ASIC crown against NVIDIA and in-house chips? Would you bet on its growth or worry about valuation? Drop your thoughts, like, and subscribe to Stock Market Breakdown.